Short-term rental laws in 2025. What every investor must know. New York just banned Airbnb in most neighborhoods. California's cracking down. And if you're thinking about jumping into short-term rentals right now, you could lose thousands in fines or get evicted from your own property. This is happening in 2025, and most investors have no idea what's coming. Hey, I'm breaking down exactly what changed, where you can still make money, and how to protect yourself if you already own a rental. By the end of this video, you'll know more than 90% of people trying to jump into this business blind. Part 1. The regulatory tsunami. Let's start with what happened. In 2024 and heading into 2025, major cities across America implemented some of the strictest short-term rental laws we've ever seen. New York City implemented a ban on most Airbnb listings, literally killing thousands of rentals overnight. San Francisco kept its existing cap of 1 unit per host. Los Angeles tightened restrictions, requiring expensive permits and limiting how many days you can rent annually. Here's why this matters. If you bought a property thinking you'd get $30,000 a month renting on Airbnb, but your city just banned it, you just lost your entire business model. We're talking about people who invested $50,000 to $200,000 in down payments and renovations with zero return. The pattern is clear. Cities are protecting long-term housing stock because their populations are desperate for affordable apartments. They blame Airbnb for the shortage. Whether that's totally fair isn't the point. These laws are here. They're getting stricter. And they're spreading. But here's the thing. Not everywhere is banning short-term rentals. Some states and smaller cities still welcome them. You just have to know where you are and what the actual rules are in your specific zip code. Part 2. Where you can still win. Let me give you the real talk. Short-term rentals still work. You just can't operate like it's 2018 anymore. First, check your local laws. Not your state, your actual city or county. Laws differ block by block sometimes. Some cities require permits that cost anywhere from $500 to $5,000 annually. Others cap the number of days you can rent, sometimes at 90 days per year, which basically kills profitability. Some require owner-occupied units, meaning you have to live there. Go to your city's planning department website or call them directly. Spend 30 minutes here before you spend $30,000 on a property. States like Texas, Florida, and parts of the Southeast still have reasonable regulations. Many rural areas and secondary cities haven't implemented restrictions because they actually want the tourism revenue. Places like Austin, Nashville, and Bozeman have healthy short-term rental markets, but they're expensive to buy into. Here's the financial reality. In these still open markets, you might make $3,000 to $6,000 monthly on a property that costs $400,000 to $600,000. That's 6 to 18% annual return before taxes and maintenance. Compare that to putting that same money in the S&P 500 through a Roth IRA, which historically averages 10% returns with zero stress, zero evictions, and zero regulatory headaches. Part 3. Protecting yourself right now. If you already own a short-term rental, here's what you need to do immediately. First, verify you're compliant with 2025 regulations. I'm not joking. Check this week. Cities are increasing fines and enforcement. New York fined hosts up to $15,000 per violation. You don't want that surprise. Second, diversify your rental income. Don't rely on Airbnb alone. Some smart investors are renting to corporate travelers, executives on temporary assignments, or medical tourists. These come with different contract lengths and often aren't classified as short-term tourist rentals in their city codes. Third, if you're in a high-restriction area, consider converting to long-term rentals. Yes, you'll make less per month, but it's stable. legal, and actually complies with what cities want. A long-term rental at $2,000 monthly on a $400,000 property is 5% annually. Safe and legal. Fourth, look at other real estate strategies. House hacking is still legal everywhere. Buying a duplex, living in one unit, and renting the other is legal and profitable. Long-term rental portfolios still work great. Storage unit investments, commercial real estate, or even just maxing out your 401k and Roth IRA. These are still incredible wealth-building strategies. The bottom line, short-term rentals aren't dead, but they're not the guaranteed goldmine they used to be. Before you invest a single dollar, know your local laws. If you're already in this business, get compliant immediately. And honestly, if you're just starting out and this sounds complicated, because it is, consider simpler strategies like index funds or long-term rental properties. The best investment is the one you actually understand and can operate legally. If you found this useful, please hit subscribe. We're breaking down real investment strategies every week for people trying to build actual wealth, not just chase trends. Thanks for watching, and I'll see you in the next one.